G'day folks, Jem here from FX Charts, Monday the 3rd of March. Thanks for tuning in. Well, it looks like we've got a pretty busy week ahead of us. There's a lot of data out. We've got the Russia and Ukraine problem in the mix as well, where nobody knows what's going to happen there. So it's going to be pretty hectic. Friday saw a pretty busy session as well. The euro headed sharply higher after the better than expected inflation data, which has the market thinking that maybe the ECB will not ease rates at the meeting on Thursday. Unfortunately, the euro has come back off a little bit since then because of the Russian situation. Got right up to important resistance where it stopped. So we'll go and have a look at the charts. And as you can see, the euro it has gapped a bit lower this morning. It got up to 138.25 on Friday. Now the white line here, which we can see better on the weekly charts, but that's very important resistance. I don't think we're probably going above there today. The hourly charts are pretty overbought and heading lower. So we do need to fill in the gap up to about 138, the figure, but I'm not sure we're going to go all that much above there. And certainly with the situation as it is in the Ukraine, we could see a little bit of downside for the euro ahead. In the very short term, we've got some support out here around 137.30, 137.40 is the first minor FIBO level. But it's going to be pretty choppy. I don't think anyone's really got any clue on direction. In the short term at least, but if we do go below 136, 137.30 today, then we're probably heading down to sort of 137 the figure, and below there the major FIBO is down at around 136.10, which I don't think that's in danger yet. But as you can see, there is a bit of a gap to be filled in, but the trend is higher since this 134 3/4 low. So we could end up higher and taking out this trend resistance. So if we go out and have a look at the weeklies, we can see that goes all the way back here to 2007 actually. So if it does go beyond here, the next high is at 138.90, and beyond there's not an awful lot to stop it going up to this 76.4% FIBO resistance at that's around 142.5. Now, before that, we've got this 61.8% FIBO, as well as the trend line working in our favour to stop the euro going any higher, for possibly the dollar to make a bit of a comeback. Go and have a look at the dailies, and we can see where it's been to. 138.92 is this high here. So as long as we hold this, the first FIBO support here and the 100-day moving average, just down around 136.25. So maybe we use that as a range for the next couple of days as we head towards the ECB meeting. Although having said that, there's a lot of action today. We've got Mario Draghi speaking later on in the session. We've also got all the EU manufacturing PMIs, and so it's going to be a fairly busy day. There's a fair bit of data out of the States as well. I think construction spending, personal consumption, and personal spending expenditure. So there's a lot to be going on today. So it's going to be a pretty choppy session. Moving forward to dollar yen, and given the risk aversion that's going through the market at the moment, the yen's acting as a safe haven. So that's gapped a bit lower from the Friday close. It's been down to the low 101.40. So it's there now. Really, it's on its lows, and it looks to me as though we're kind of making a bit of a rounding top here. So if that were to continue, we're going to see a choppy continuation to the downside, down to around this or 100.75 target, I think. If we go and look at further out, the 4-hourly charts, we're broken through the rising trend support here. So further action to the downside looks probable. The 4-hourly charts are pointing a bit lower. The dailies is a little bit difficult to see. We've broken below the 100-day moving average here at around 101.85. So I think we probably are headed a little bit lower down to this target here, but beyond there I wouldn't really care to say. I guess if we do head down there, we're probably going to need to take a look at 100 and see what stop losses lie down around there. We've got further decent size, a decent rising trend support down here as well though. So this is the previous 100.78. And this is down around 100, so it looks to me as though we are probably heading in that direction. Moving forward to cable, well, that had a decent rise. It was pretty choppy on Friday. It had a decent rise though in line with the euro, but it's opened up lower this morning. It's down at 167.33. It's been down to around 167.15. Now the short-term charts are a little bit toppy, but the 4 hourlies are not telling us an awful lot. I think we're probably just going to continue this choppy trade, really. I don't think we're going above 168.20. Probably not too much above 167.75 today, to be honest. But certainly the trend is headed a little bit higher. And if we can take 168.20 out eventually, then I think we're heading back up here to this 168.90 level. The dailies are a little bit indecisive, so I'm not really too phased one way or another with cable. And ultimately, I think for the next hour or so, we're probably going to top her out around here, so 167.75, and possibly come back down to this sort of base down here, which is around 165.75. So I'd be using that sort of 200-point range as a bit of a guide in the short term, with the possibility of a bit more downside than upside, I think. Dollar Swiss. Well, that headed sharply lower on Friday. It broke below the support here, and it's actually moved all the way down. So we've got some new FIBO levels now. But looking further out, having broken this 88.5 level, we've taken out this previous low here at 87.98 as well. Now the Swiss is acting as a safe haven from the Russian issues. Euro Swiss is heading lower as well. That's going to worry this Swiss National Bank. So they're going to come out with some more rhetoric about protecting the 1.2 floor in the cross. I think they might have their work cut out if it really takes off in Russia. But looking further out, if we go right out to the weeklies, actually, now they're a little bit difficult to see. Let me just blow that up a bit. But having taken this out, it looks to me as though we're heading down towards the base of this channel at around 86.75, 86.5. And below there's not an awful lot until 85, 60, 70. I'll go back to the dailies here, and we can see the potential for the downside move here. It's there's nothing all the way back here until where are we? 2011. So there's a fair bit of potential on the downside, and if the Russian situation does take off, then the Swiss franc is going to be a major beneficiary. Looking forward to the, and that's one thing that will not be a beneficiary of the Russian situation. It's had a gap lower already, been down to below 89, actually, having closed at 89.30. It looks off then, but it's opened lower. And in a bit similar fashion to dollar yen, the Aussie is making this kind of rounding top formation, and we could see a bit of a break. If it breaks this support level here at about 88.70, we could see a bit of a swift move lower, although we have got rising trend support here coming in at around 88.30.40, so that may support it. But the 1 hour charts, I beg your pardon, are heading a bit lower. The 4 hour charts are backing that up as well. So I think the downside is probably the way to go. If we do make a squeeze higher, and we have got a lot of data out today. We've got the well, for a start, we've got Chinese non-manufacturing official PMI and the HSBC manufacturing PMI. But there's also a lot out of Australia. We've got the ANZ Job Ads, TD inflation, home sales, amongst other things. So it's going to be a busy day for the Aussie. It's not going to all be one-way traffic to the downside, but it does look as though it's headed lower. If we saw it much above 89.50, 89.80, where the 100 and 200 hour moving averages are, then I think I'll probably be a seller for another leg to the downside. Just quickly on the Kiwi, now that made a new high above 84, got up to about 84.30 on Friday, and it's come back off. It finished the week about 83.75, and it's lower this morning on the risk aversion trade. It does look a little bit heavy to me, and I think it's just the 4 hour charts, 1 hour charts and the 4 hour charts are both pointing a little bit lower. So we might see a bit of a drift off down to this sort of FIBO support down here around 83.35.40. If we go below that, then I think we're back towards the middle of this recent range. And at the end of the day, I think, as I've said too many times before, this 82 to 84 range, every time we get up here, we see a spike top, and it comes back off quite quickly. But the market is expecting a move to hike rates by the RBA and NZ next week. So that should keep the Kiwi reasonably underpinned. And if we take out this resistance level at 84.60, then we could get a move up here, quite a dramatic move really, I think to sort of 85.30. But I think it's too early to be looking at that yet. So that's about it for the moment. Now, aside from the data today, we've got a lot coming out this week. As I've already said, we've got the ECB on Thursday. We've also got the RBA meeting tomorrow and the press statement. And I think it pays to keep a close eye on what the China data is today. Glenn Stevens might get a bit dovish on the global growth outlook if the Chinese PMI is a week today. And he wouldn't mind the Aussie lower anyway, so he could well talk that down. We've also got the Bank of England meeting on Thursday. No real change expected there. And then, of course, on Friday we've got the US jobs numbers and the non-farm payrolls. So it's going to be a pretty hectic week all round. So keep it fairly flexible, I think, and keep your stop losses reasonably tight, I think is the name of the game. So that's about it for the moment. Have a very good one, and we'll talk to you tomorrow. Cheers.